I know it's hard to believe, but 2026 is right around the corner. And for a lot of you, a new home is at the top of that list. But here's the deal. If you want to actually own a home in 2026, you can't wait until spring to get started. The most important first step is getting a strategic pre-approval. So in today's video, what we're going to cover is what a pre-approval should actually look like, what documents you'll need, when to start, and how a solid pre-approval actually gives you leverage in negotiation and confidence in this market. Josh, where do we start?
This, honestly, if we were to boil the podcast, we're close to 200 episodes now, Jeb. If we were to take 200 episodes and to say, what is the most important thing? It is a rock solid, bulletproof pre-approval. Because we'll use the example. We have a listener that I talked to for the first time, probably more than 6 months ago. She just sent over a contract last night. But because we did the pre-approval, she's pivoted about 3 different times. She's moving from Chicago down to Texas. And then, hey, Texas didn't work out. She's getting relocated to Tucson. And we were able to, because of the strong foundation of that rock solid pre-approval, just adjust every time we went through. So that's the piece that we want to walk you through. And there's also 2 giant mistakes that I see other lenders putting people through in this pre-approval process that I think are important, that you know that their red flags are just eliminators of, you can't work with this person if this is how they do business, if you want to be an educated home buyer.
Well, one thing I think, Josh, is that buyers think this is easy, right? They think finding the home is the hardest part. And in some cases it could be, but what I'll tell you is that when you have the rock solid foundation that we're talking about here, the pre-approval process, everything else is a little bit easier, especially when you go to make offers, because what happens is when you don't have that, you end up making offers and getting into contracts and deals fall apart, or you're scrambling at the last minute, calling lenders, trying to figure out, hey, can you help me because everybody else screwed up on the deal. So let's start, Josh, with the discovery call, kind of what that process looks like up front with somebody that knows what they're doing versus maybe the call center, the person you find online.
Well, let's start by saying this is giant mistake number 1 that I see other lenders, and I mean good lenders, people that I know who I know to be good loan officers. They will start the process by saying, Jeb Realtor sends over Susie Buyer, and
just go to my website.
The first response is, hey, Susie, go to my website and fill out my application and we can schedule some time to talk. I don't know about you guys, but if someone says, hey, I don't have time to talk to you, but you go spend 10 to 20 minutes providing your date of birth, where you live, your social security number, all of those things, I'm going to tell you to go pound sand. So I don't expect my clients to operate any differently. And that's just the reality of like human nature of, I'm not giving you some of my most personal, intimate detail without deciding, do I like you? Do we mesh? Do you sound like the person that has the solution for me? So largely that discovery call, the very first thing, that's what that is for you and for me to get on the same page, to make sure that we like each other, we're communicating well. I'm going to ask some questions. I'm going to start by asking you, what questions do you have about the process? What do you want to know? So that conversation, sometimes it's 7 to 10 minutes. Sometimes it's 25 to 30 minutes. It's as long as it needs to be for you to get your questions answered. And I don't mean, hey, what do I qualify for in that process? It's, does this person understand me, where I'm coming from, what I want to achieve, and do they seem to have a roadmap for getting me there? So from that, I mean, that conversation, Jeb, I often start with open-ended questions that allow you to tell me what I need to know. Hey,
well, Josh, yeah. I mean, what I'll say is that you have a lot of conversations with people that can't buy homes. I mean, let's be honest. Like, there are people that can't buy for one reason or another. Job issue, credit issue, down payment issue, whatever it is. Maybe just can't afford what they want. And rather than just go fill out an application and waste their time and possibly your time or anybody else's time, it's having a conversation and understanding the process and saying, okay, yes, based on, what I have in the bank, my credit score, all of that, maybe I need to wait another 3 months to go through this process or do this, making sure my ducks are in a row versus spending time again, doing something that isn't going to pan out to anything to begin with.
Can I have 30 seconds, amigos? First off, I want to say thank you. The fact that you tune in every week means more than we can say. What started as 2 guys talking shop turned into a show that we've never imagined, and that's because of you. Secondly, We're just getting started here. If you like what we're doing, make sure you follow along. Right now, only about 30% of our regular listeners do, and we'd love to see that number continue to climb. Our promise to you is that we'll keep bringing you the information that you actually want to hear. And with that, we promise that we'll keep making the show worth your time. That's it. Thanks for being here.
2 of those calls in the last 24 hours. Right before we started recording, spoke to a listener. She has some credit issues and she knows that. And when we went through it and we talked through it, she's like, yeah, I'm not ready. This is going to be about 6 months. She's going to work with my credit guy, the people that we suggest. And I think she's absolutely going to be ready in 6 months. Talked to a younger guy yesterday, 25 years old. And he's like, yeah, it's probably 6 to 12 months. And that was really just a planning call. What should you be doing now? What's important? Should I be investing? Should I move my savings over to a high yield savings versus the market in case the market tanks before I'm ready to buy? So a lot of that comes into it. I always start with, hey, before I jump in with any questions for you, what's most important to you? Do you have any questions you want to start with? And I would say it's 50-50. Some people are like, I don't even really know what this process looks like. Why don't you start? Other times they'll say, I want to know X, I want to know Y, I want to know Z. Either way, we can start there. But when I start with the question, I want to ask open-ended things. Have you seen any homes, either online or stopped into an open house, that are in your price range that would meet your needs? Or did you have a strong feeling about what that payment needs to look like? So now we're identifying a target. We don't know the house, but we got a range of what this looks like. So we go, okay, we want to talk about how much money do you have to work with? What do your credit scores look like right now? It starts defining. It doesn't tell us what loan program you're going to go to, but it tells us, do we have any options? Do we have more than one option? What documentation do we need to gather for the pre-approval based off of those options and your situation and your scenario? This, again, is why I would never complete a loan application without having a conversation. I would never ask someone to complete a loan application without having this conversation, because I may be on the complete wrong path. You may be 6 to 12 months out. You may be totally ineligible to buy, or I may just not know what I need from you to get that rock solid pre-approval, because it varies with every borrower, which we're going to go into.
Well, I think it's important to note too, for anybody listening to this, it's never too early to start the pre-approval process, right? You're hearing this conversation right now and you're thinking, well, I'm 6 months out. Why would I have the conversation now? You have the conversation now so that if there are things that you need to work on, things that you can improve to put you in a better financial position, credit position, down payments, whatever it is, you can work on those things, or at least have the knowledge necessary to say, hey, in 6 months, I am going to be ready with confidence, right? So the earlier you have that conversation, the better off you are. In fact, if you want to get in touch with the team and have that conversation, that Josh is talking about today, you can use that link in the description. So Josh, after that initial call, you say, hey, listen, you're vibing, you guys are on the same page. They say, what are the next steps? What is that?
The next step is super simple. We do need that application because the application provides a bunch of demographic information. I was at an event with a bunch of lenders this week, and a younger kid, he tells me, hey, I would never send out an online application. I do them all over the phone. And there's some truth in that. It makes it a little bit easier for you as the borrower, but it's a long time and it feels like an interrogation. We're asking you very personal information. So if your lender wants to do that with you over the phone, it can be a good thing, assuming that you have the time, but we're going to do it online. We're going to give you the ability to do that. And we have dumbed this thing down. So people often ask me, well, it didn't ask me about how much money I have in the bank. It didn't ask me how much I owe on my auto. And I say, I want that as simple as possible for you to be able to complete. So what are the things that I'm not necessarily going to get from your documentation? Your demographic information, like a lot of times, even though if I get a W-2, your social security number is redacted on there. We don't get that information. So full name, social security number, date of birth, all of that stuff straight from the horse's mouth. All of your best contact info.
Are you calling the borrowers a horse?
At least
you might not want to start there, Josh. That's not a good first conversation.
Straight from the source, if that makes you feel better, Jeb. But from there, then we want to have a 2-year residence history. We have to have that on the loan application. Where have you lived for the last couple of years? What does it cost you to live there? Do you still own any of that property? Then we need a 2-year work history. So sometimes people have changed jobs several times and they're like, do you really need this? Yes, the underwriter wants to review a full 2-year work history, job titles, start date, end date, all of that stuff. So we're going to be able to take your income from the income documentation you get. So I don't really need to know what you think your income is, because what I'm going to arrive at is what does the underwriter, using the qualifying guidelines, think your income is. So from there, you're going to give us your asset statements. So we may ask, what institution and ballpark balance, but we're going to take the statements that you provide us and update all that information. We're going to pull credit, and we'll talk about that in a second. We're going to pull credit, and it's going to import everything in there. So I don't need to know how much you owe on your credit card or your auto, because we're going to get all that information. It does have a declaration section, which is important because that asks you if you had a bankruptcy, if you had a foreclosure. It's for the lender to get those direct answers from you to make sure that you are disclosing anything that may not be disclosed in the documentation, but that they need to know. So 5 to 10 minute process max, depending on how many borrowers are there. I would do it from a computer. I know a lot of our younger borrowers do everything on the phone. Maybe it takes a little bit longer on the phone. You can knock that out really quickly on a computer. I'm also, in our conversation, our first discovery call, I'm taking notes. Is this an employee or is this someone that's self-employed? Do they own any other real estate? Any number of things. Are they divorced? Do they have alimony? Do they have child support? Do they owe any of that stuff? It tells me all of the documentation that I need. And we're going to put requests for that in the portal where you do the loan application. It's going to give you the list of everything that you need to provide. And that doesn't have to be the same with every lender, but they better be using some secure method of getting the documentation from you. So what can that look like? I can send you a secure email, the pain in the butt ones where you have to get a two-factor authentication and log into it, and you can securely upload. I can send you a OneDrive link. We use a portal. It keeps it clean and easy, and everything is documented in there. Everyone on my processing team can see that. But all of those are options. What is not an option, and you should be a giant red flag, is if you get a lender saying, hey, just email me over your tax return and your pay stubs and your W-2s. Unlikely that someone's going to hack into their email or yours and find it. You just don't want important personal information like that out there.
Sure. So, you've got the application, you've got the documentation now. One of the questions that a lot of people ask, Josh, is how long does this pre-approval process take? Like, is it a week? Is it a day? Back when I did loans back in the day, I mean, sometimes depending on how busy you are, you can get one of these done in 24 hours. Sometimes it might take a couple of days, just depending on what somebody's file looks like. If it's complex, if they've got a lot of, own multiple businesses, got a bunch of K1s, or you maybe need an underwriter to review something because you're just not 100% sure how they're going to see it. Is it something that happens immediately? Expectations here.
Let's go and say, what's the absolute best case? Jeb, you meet someone at the soccer game and they go, hey, we just found this house across the street. We want to write an offer. And you go and say, well, let's go look at it. And you call and ask them, have you been pre-approved? Nope, never been pre-approved. You go, cool, I want to help you write this offer, but not until you're pre-approved. Josh isn't doing anything on a Saturday morning. We have a quick discovery call. I send them the link. They go home, do the application, send everything back over. We take a look at it, run through it. So 2 to 4 hours would be your absolute best case if it has to happen. There's a house that is going to go away and you're not going to get it if your lender can't meet that timeline.
I think something important you said there, Josh, is it's very borrower dependent. How quickly the borrower gives you information, provides the documentation, the details that are necessary, the quicker you can do your job. What I often see happen, somebody does the application, or they half do an application, they half piecemeal documentation, and then they start asking, well, when am I going to get the pre-approval? And it's very difficult to do that without having all your ducks in a row, because at the end of the day, you don't want to tell people they're pre-approved if they're not.
100%. The best outcome of this, Jeb, what I can say, I was going to say this in the intro, you had said something that triggered this, but the most common comment I get when we start the process from people is, that's it. There's nothing more for me to do. The actual process, when we receive that contract, the process from contract to close is very, very simple with very little for the borrower to do. And that's because we front load this. So know that your actions through this process is saying something to the lender. So that person that says, hey, I want to write an offer in 2 hours and I'm going to run home, do this application, and within 90 minutes get you everything, that tells me they're highly motivated and they need me to be motivated to get them what they want. If someone does a partial job on the application, sends over a pay stub, hey, I got to get my W-2s, I'm not sure where my driver's license or passport is, and a week later we get half of it. And now we review it and we go, okay, I need X, Y, and Z to be able to get you that rock solid approval. We truly do. If you half-ass it, and you give me 50% of what I need, but I look at it and it's the important 50%, and I feel like I can give you a strong answer with a needs list of what we need to truly convert it from strong pre-approval to rock solid pre-approval, we're going to do that because speed kills. We want to get you the answers you want as quickly as possible. But sometimes what we get is the easy stuff and it doesn't tell us anything. And the borrower's like, well, I gave you most of what you asked for. And you're like, okay, you gave me most of what I asked for, but not the important stuff. So I need X, Y, and Z to get you what you want. And what I'm saying is, if we've been working on yours for 2 weeks and you're piecemealing stuff in like that, and 2 other people I talked to yesterday send me 100% perfect, complete, compliant file, then obviously they're going to get prioritized because we feel like that's someone that wants to write an offer now, that wants to get out in the market, or at least wants solid answers right now. So we're just triaging based off of that. So your question was very easy. How long does this take? For a straightforward file that doesn't have questions that need to go to underwriting, which is 95% of the files. Most people don't have any curveballs in there that we need to take to underwriting. This should be a 24-hour process, 48 worst case. Sometimes there's crazy, weird, hairy stuff in there that there's some back and forth with the underwriter, or we need some additional documentation. So within a week, you should be able to get a solid pre-approval, no matter how complex and difficult your situation is.
All right. So what does that actually look like, Josh? They've submitted their documentation. I mean, we've talked about how long it takes, but what are you doing in that time frame? Like what solidifies that approval?
So for me, I mean, some loan officers, they're a one-man gang. They do all of this. For me, my team reviews everything for completeness. They're not reviewing it to run the income calculation or any of that stuff, but they want to make sure that it's complete for me to review. At that point, it's about a 20 to 30-minute process for me to go in and say, okay, here's what we talked about. We decided we want to do possibly a 3% down conventional or a 3.5% down FHA on a $400,000 house in Central Florida. So with that, that's what I'm setting up the file. I'm putting in the proper tax rate. I'm putting in insurance a little bit higher because it's in Florida. I'm running the ratios. I'm running the qualifying income, not again what you think you make, but per the underwriting guidelines, what the underwriter is going to come up with, and determining, do our ratios work? Part of that is pulling the credit report. We'll talk about this in a minute. But that credit report, it can be a soft pull if we're way ahead of time. Maybe we only do a 1 bureau soft pull if we're not thinking of buying for a year. That at least gets us a snapshot of kind of where we're at and allows us to confirm that the ratios are accurate. When I say ratios, your debt to income ratio. We have an accurate income, we have accurate debts, and we also have the assets in here, and we know what we have. Are we short? Do we have too much? Do we have transfers? Do we have something that we got to document? So that's what that review looks like. It could raise some more questions for probably 2 out of 3 borrowers. It doesn't. It's exactly what we talked about on the phone. They provided what we need and we go through it. And all we're doing is confirming they can do what they want. And now I need to present those options to them. So in that example that we're talking about, okay, here is what a 0-point loan looks like, FHA and conventional 3% down as of today for you with your credit scores for a $400,000 single family home in Central Florida. And from there, now we schedule call number 2. And call number 2 is truly the options call. The discovery call is getting to know each other, making sure we like each other, figuring out exactly what you want to do, and me asking the questions I need to help you get that. Now you've provided the information, and it's time for me to provide some information to you. Here's what those options look like. We've talked about this a million times on the show. What does a pre-approval look like? A lot of people feel like it's getting a pre-approval letter. And this is mistake number 2. And it's a big one because probably 50% of the time I see this, the process is finished and the loan officer just emails back, okay, you're pre-approved. Here's a pre-approval for $400,000 for a house in Central Florida. Do you know what your monthly payment is? Do you know how much cash you need to have? Do you know which of those options, the 3% conventional or the 3.5% FHA, makes more sense for you? You don't. So we want to have that call. We want to go through those options. And what I tell people, oftentimes on the first call, the discovery call, they don't have a ton of questions. I say it's not a problem. Because on call number 2, when I give you those options and you're seeing real numbers, you're going to have a lot of questions. Well, how do we get this number down? Could I qualify for 415? I found the perfect house and it's 415. Or I found the perfect house and it has a $200 HOA. Does that blow me out? That second call is probably the most important part, and getting the options comparison is more important than getting that pre-approval letter. People feel like, hey, I'm not officially pre-approved until I have the letter. My preference is always to do a custom pre-approval for you when you write the offer, because you might find a house for $390, you might find a house for $405. I want to write that day that your agent is writing the offer to match their offer, so they know that we're all on the same page. Agent, loan officer, buyer, all in sync working on this file. And then I can be included on the offer and follow up. So that is important, but please do not let your pre-approval end with getting a pre-approval letter when you haven't seen those options that show you plain as day, do I qualify for the price range that I want? How much money do I need? What's my monthly payment? And what is the best loan for me to accomplish?
All right, you have a quote written down here, Josh, that I'm going to read, and it says, "This is where a good lender stops being a form processor and becomes an advisor." So starting to advise in the process now. So going back, Josh, you've had that second discovery call. You've got the documentation. They're pre-approved. What does the full pre-approval actually include? You kind of mentioned some of the things that we just talked about a moment ago, but break it down in a little bit more detail.
In terms of what the documentation that we would give to your agent, or...
No, like that conversation that you're having with that buyer after the I mean, like, you know, they're pre-approved. What you mentioned cash to close earlier. You mentioned different loan programs. What is all kind of added in that conversation there that's being included?
By the time that call is over, we should have a decision. It's not set in stone. I mean, if we look at it, because what I will say, probably the most common conversation I have, many of our buyers, in excess of 50% are first-time buyers, probably 60% are first-time buyers. Most of them are doing a minimum down. So what is the most common conversation to have? 3% conventional, 3.5% FHA. And even if we think we know from the first call, I'm always going to put them side by side, because you need to see the differences and see why we're saying you need to go conventional or why FHA is better. And again, as an advisor, I'm not a dictator. It's not my job to tell you, hey, Jeb, you need to go with the FHA. It's here's what I'm seeing. For your situation, I believe FHA is better for A, B, and C reasons. What are your feelings when you see these two numbers? And the reason why I say that is a lot of times people will call and tell me, well, I talked to another lender. They said, I have an 800 credit score, so I wouldn't do FHA. I need to do conventional. Well, I've presented these numbers to buyers with 800 credit scores and had them look at the FHA and go, I want that. Why would I not do that? Payments, $220 lower. And yes, I'm paying an upfront mortgage insurance premium, but in 2.5 years or 2 years, it pays itself off. And I'm lighter in terms of my cash flow, or I have more cash flow every month. So I should never assume what the answer is for you. And what I will say is many times the call wraps up with the client saying, what would you do? And I say, okay, here's what I know about you from our conversations, which is why we had that discovery call, why we're going through this. You told me you're not really risk tolerant. You don't want things to change. You don't like this. You don't like that. And for those reasons, I would suggest going this way. Does that sound right to you? And 9 times out of 10, they're going to go, yeah, that does sound right. Or they, well, not really. You picked up something that I wasn't really intending to communicate to you. But that's what that looks like. We are truly working together, and this is an advisor role. You can watch all the YouTube videos you want. You can read as many articles as you want. You are not going to be a mortgage expert. This isn't rocket science, but it is a complex industry. You need someone who's going to be able to walk you through that, show you, not tell you, the differences between the options that exist for you, and help you select the best one.
Good advice. We talked a little bit earlier, Josh, about never too early to start the process, but let's kind of break it down maybe in where you are in the process, because that kind of dictates how far you should go in this pre-approval process, if you will.
So that if you're within 0 to 90 days, and we're going to talk
0
about
to 90 days of buying a house, or 0 to 90
So
days of starting
offers.
the process.
Let's say I'm writing offers.
Got it.
I could see myself writing offers in the next 90 days. We should do a full pre-approval. This process we just talked about, we should go all the way through it, including a real credit report. We can do it with a soft pull, but that's a different episode. I think we should do the hard pull if you're within 90 days. And really, what's the big difference? If you think you're a little more than 90 days, 90 to 180 days. So 3 to 6 months, I will be writing offers on homes. We probably should still do the same full process. We might want to talk about a soft pull there. The credit report is good for 120 days to closing. So from the day we pull it to closing. So figure 90 days to get something under contract and 30 days to close. I would say only once or twice in a year do I end up having to pull a second credit report for a borrower. We have a listener right now that we had to. It's new construction. It went way on the far end of the window, and we pulled a new credit report. It's not a big deal, but if we're more than 3 months out, let's do a full 3 bureau soft pull. Let's get a look at everything, make sure we think the scores are there. But I still think we should be looking at all of your income, and asset documentation. And sometimes people say, well, I don't have the money. I'm going to be getting a gift and my gift donor is not going to give me anything right now. So we're going to go, okay, we're going to put a placeholder in there. We got a $40,000 gift coming. Or you say, hey, I've got $9,000 in the bank. You're telling me I need $23,000. In 6 months, I'm saving $3,000 a month. I'll have $27,000. Okay, we're just making notes in the system. So that's kind of how that looks. We're looking at some more changes, and especially this time of year when we're going into the first part of the year, a lot of people get bonuses in the first quarter or raises in the first quarter. So some people say, hey, I'm due for a 10% raise. I'm going to go from $80,000 a year to $88,000 a year.
I've never gotten either.
That's the joys of being self-employed, Jeff. The joys of being self-employed.
Brutal.
You get to give yourself a raise, and you can choose to do it anytime you want. Yep.
Sure. Oh, okay. So basically, and if you're 6+ months out, it just, the discovery call is kind of the option that you want to go,
Yeah,
right?
The gentleman that I talked to yesterday, we didn't do anything at this point in time. And I said, we can look at it when we get within 90 days, or if you say within 6 months, when you really feel like, hey, I think I'm more serious about this, let's go. And part of that was with him, you could tell he was very well qualified for what he wanted to do. Super conservative guy, great credit, good income increasing, saving rapidly. He's got enough now. We'll have more then. So in that process, it's like, hey, as long as you're telling me the truth here, I don't see any huge need for doing it. But sometimes people just want to know. They're like, I'm not sure. I'm a little dicey as a borrower, and I want to make sure that a year from now I'll be okay. If they want to do the full thing with a soft pull, we can absolutely do that now.
All right. One question, Josh, always comes up is how long is this good for? I don't know if I'm 3 months out or 4 months out, and should I start the pre-approval process now? How, do I have to do it again? Easy. What's the easy answer?
It's good as long as the underlying data remains the same. So what do we mean? You didn't lose your job. You didn't get a pay cut. You didn't miss a credit card and your credit score dropped 50 basis points. We didn't go out and buy a Ferrari. So now we got a new $3,000 payment that didn't get accounted for. You didn't get divorced. So now your wife's income walked out the door. As long as everything stays the same, nothing should change here. The credit report will expire. The pay stubs will be out of date and we'll need to get new ones. Bank statements out of date, need to get new ones. When we roll over, if you're not buying until February, well, in January, you're going to get a new W-2. We'll have to pick up that new W-2. So it's not starting over. It's not a new application. It's not we're throwing all this documentation out. It's refreshing as we go. So a lot of times people will give a pre-approval. This pre-approval is good through October 27th. It's like, why would I put a date on it? You can see the date I prepared it, and reasonable realtors know that if that thing's 2 months out of date, they may want to get a refreshed one from me to make sure I'm saying today that we've validated and verified that everything is still the same.
Yeah. And why this is important, guys, is as the real estate side of this transaction, one thing that, even when the buyer side is, we want to make sure people are pre-approved, but when offers are written, we're verifying that buyers are pre-approved, right? We're calling the lenders, we're having conversations. And I can tell you from having experience in this business, when I call, somebody that's got a pre-approval letter and I start asking the right questions to their lender, I can tell whether or not that lender was detailed in that process or not based on the answers that they're giving me. So, you want somebody that you feel comfortable with, confident with. And I can tell when I feel weary about it, I'm usually right. And that doesn't mean we didn't accept the offer, because oftentimes the offer is still the better of the offers. And I can only do so much. But when I had that weird feeling that the people weren't who I thought they were, usually right. So you want confidence. I want to be confident for my clients, for my sellers, that this buyer is qualified, that this deal is going to close, and that the lender on the other side is somebody that knows what they're doing.
Well, you don't want to say bad things about lenders, but I'm a lender, so I can do it. In a past life, we flipped houses, sold 35, 40 houses that we had flipped, and I would never accept an offer without having a conversation with the lender. The reason being is 2 out of 3 are worthless, and they will demonstrate that to you within about 2 minutes in a phone call. You can ask some pointed questions about the client, about the process, about them, and they will say something stupid that lets you know this is not going to be a fun process for anyone.
I can tell you, if somebody just touts how good they are at everything as a market, they run, right? Look at Google reviews, find people, that have had a good job, and get a referral, right? We help hundreds of people here on YouTube. A lot of really good conversations. Just read the comments. If you need to go through that process, need somebody to guide you, make sure you check the link in the description. Josh can guide you. We'd be happy to help. In fact, we want to help so that we can get you to the finish line. Josh, if somebody is thinking about buying a home in 2026, what should they do today?
Reach out and start with that discovery call. You don't know what you don't know. So I have a lot of those calls. You said I have a lot of calls. I have, a lot more calls, probably 10 times more calls in a month than loans that we close. And I don't mean total calls. I mean new calls from people. Sometimes they just have a question. Sometimes they want clarification on something we said in a video. Sometimes they don't know where they're at and where it's going to be. The whole purpose of the show, The Educated Homebuyer, is to educate people, meaning that they're ignorant. They're not dumb. They're ignorant. They don't know something. So we are here to have those conversations. So that initial discovery call, we may conclude from there that there's nothing to do for 3 months, 6 months, 12 months, but those are always good calls. I'm always happy to talk to listeners, to talk to borrowers that my realtors refer. People are sometimes like, I don't want them to talk to you yet. They're not quite ready to go. I don't want to refer my cousin because he's not quite ready to buy. Like, I am probably most valuable the further out you are from it, so that you feel like you're confident and have a game plan. And once we have that discovery call, now we can determine when is it appropriate to work on this. And again, my clients talk about the process being very smooth and simple and easy. And that's largely a function of the pre-approval process, because some of them will say, hey, I was pre-approved with someone else. They didn't do half of this stuff. Like, okay, because they're an idiot and they don't want to get you a rock solid pre-approval. They want to get you an answer as soon as possible, send you out looking for homes, hopefully get a contract, and then figure out how they can put that together. We front load the work here so that the back end is simple, easy, and stress-free. And I'm biased. That's me. That's how I operate in life. That's how I want it to be for my clients. If you feel differently, you can go a different path. But this is what this process should look like, of front loading the work to get you all the answers, all the questions, all that are possible. Because during the process, Jeb, an appraisal is going to come up. We're going to have that conversation. Inspection is going to come up. You're going to have negotiations back and forth with the seller. There's plenty of stuff to worry about. Worry about that when you're in process. Worry about this stuff well ahead of time.
I'm going to leave you with 3 quotes today. One we have written down, Josh: your pre-approval should make you feel confident, not confused. The second is, buying a home isn't about racing to get pre-approved. It's about getting pre-approved the right way. The last one is, buy right, borrow smart, build wealth. Adios.
Amigos.